Hello and welcome to the Buffett Trail, our continuing coverage of the Berkshire Hathaway Annual General Meeting 2018. The event is done. Of course, we get to you the analysis and insights of what transpired today. Of course, the event is being covered by 18 Hour in partnership with Motilal Oswal Asset Management Company. And we have a great gathering out here of people who've attended the event today and a great esteemed panel on the stage that will share their insights and thoughts and perspectives on what they derive from today's mega Q&A session between Mr. Warren Buffett, Mr. Charlie Munger, and the shareholders of Berkshire Hathaway. I have with me Mr. Samir Arora, Mr. Ramdev Agrawal, Gautam Sinha Roy, as well as Ashish Somaya. Let's start off with you, Samir. What did you take away from today's event?
The biggest thing I took away was that the Chinese are taking over the world. Because if you saw, there were some 6 or 7 Chinese questions. And since these came out of a lottery, that means they must have put in 30, 40 questions to have that much output. Secondly, there was no Indian guy asking a question, so I don't know what you guys were doing. But even in the question answer, it was clear that Charlie Munger is saying that you should put more in China, and India was not mentioned. So a big picture, that was the first point. Let's move on one by one and I'll come back with more.
Okay. Mr. Agrawal.
So I was surprised by those 3 newspapers, and physically I've never seen in my last 20 years bring any object like this on this thing. And then he had that chart. I think he wanted to drive the point that I mean he did buy at $38 and sold at $40. So and the same thing, the index from there. After that Pearl Harbor incidents and whatever happened in next 76 years, that $10,000 of 1942 became $51 million, only if you stayed invested. So he wanted to drive point, don't focus too much on day-to-day events, and even the event of Pearl Harbor attack. So things don't matter, countries prosper. You need only 2 things. You need to buy right stock at reasonable. I mean, that time it was a fantastic time to buy because it was adversity at that point of time. But if you buy right stock and at reasonable time, unless it is a complete crazy time, it's a wrong time and wrong stock should not be bought. If you have not done that, you are destined to make a lot of money.
Yeah, and largely the point was that markets can tide over geopolitics over the long term. Gautam?
I think for me it was again, reiterating that productive assets can create 100 times more wealth than unproductive assets. And I love the part where he said that cryptocurrencies are non-productive assets. So that clears a lot of doubts in people's minds around cryptocurrencies, right?
Ashish?
So one of the things, I mean, it came out probably very clearly the first time, this time around, which is that when you are following certain gurus or, when you're listening to some of these guys who are widely acclaimed as teachers, you need to know what to pick on and what not to pick on actually, because they have their own competencies. So you see, there was long discussion today about buying newspapers 5 years back. There was a long discussion about technology and not investing in technology. And Mr. Manjar actually said that, he visited Google campus, but he thought it just looks like a kindergarten and he couldn't figure out why people are going so crazy about it. So I think they have their own limits of competency and what to pick, what not to pick. Because, 15 years later, they might come back and say, okay, we missed this. So you need to be very clear where the competencies are and what you will pick and what you will not pick.
Okay, let me start with the interesting part, and that's his take on Bitcoin, because aside of that, he did not make an emphatic statement, but he made it known to the world that he thinks it's a really bad idea. Samir?
I agree, and I've been saying it longer than him. But seriously, it makes no sense. Bitcoin makes no sense because it's not even clear whether it's a asset for transaction, or is it an asset as a store of value? I mean, is it a mode of transaction like money or currency, or is it like a store of value like gold? If that also somebody could clarify, because everybody justifies it on the basis that it's a good transaction value because it'll be hidden and the government won't know about it, blah blah blah. But when they say what should it be valued at, the normal logic given by the bulls is that the value of gold in the economy, in the world is $6 trillion, and if this becomes even X% of that, which means they treat it as a store of value. And both these things are inconsistent, because if you believe that it will keep going up, you will not transact.
No, but don't you think the excitement with Bitcoin is also about the underlying blockchain?
No, nobody's interested in that. That is underlying. It's like saying that in '99 you should have bought some web companies, pet.com or grocery, whatever, van.com, but the internet survived. So neither he or I are talking about blockchain because none of us understand it.
Yeah, that's true. It's complicated. But Bitcoin, he's saying that's a complete washout. I mean, he's calling it unproductive, and he's concerned about it. He said it's going to end badly. The fact that everybody's buying Bitcoin because the other person the person next to him is just a bad idea. It's just a bad sign.
Yeah, Buffett was a little rational. He tried to rationalize why Bitcoin is bad or cryptocurrency is bad. But Charlie Munger just kind of went.
I don't even want to talk about
he said,
I hate it more than him.
Yeah. So, of course, I don't understand what is cryptocurrency. So, I never bothered to really understand what exactly it is. But I think Buffett 2-3 times came back on this unproductive assets. I think
Correct.
he went to the extent of saying even gold.
Gold, yeah,
Since
that's
the
right.
Christianity, I mean, if you had bought it 2000 years back, then also that 10 gram would have remained 10 gram and you would have made, I think, 0.2% or something, correct? So I think this time he demolished this unproductive assets as an investment class.
Yeah, no, most definitely. And Gautam, it's important because as an investment manager, I'm sure you engage in a lot of debates where you're constantly like, dude, I don't think Bitcoin makes sense. But, that's the thing. That's essentially the point that one is wanting to emphasize on.
Yeah, I have been having a running feud in my engineering WhatsApp group on why cryptocurrency shouldn't be bought. And believe me, some very intelligent people are big fans of investing or trading in cryptocurrencies. So it was good to hear that, and I sent it to the groups soon after. But the important thing is
they still believe they're investing in Bitcoin.
Yeah, they think they're investing. So that's the biggest point. They think they're investing in Bitcoins. So unproductive assets getting demolished in an era where off late till like December, cryptocurrencies were the best performing asset class over the last 3 years. So to demolish that in such a time was very important, to get that clarity of thought that when you buy unproductive assets, the only hope you buy it with is that you will find a greater fool whom you can sell and who will in turn hope for to get a greater fool who they can pass on to. So that greater fool theory has to be brought out, and he did that brilliantly. So
he did that brilliantly.
But
But point is, Ashish, what about the productive assets? What about the outlook for equities? He didn't directly comment on market valuations right now, but he said that, look, I'm sitting on a lot of cash, but I don't know what to do with it. I don't know what to buy because the price doesn't seem fair. So productive assets are also not yielding the kind of returns that he would have either ways expected.
So I think there were many points on their challenges of creating returns from productive assets. I think there was this kid who asked him a question about why have we got into capital intensive businesses. And then he said that, there was a point in time we could deploy only as much with highly capital efficient businesses, and then they also come at a certain valuation. That's why they've gone to the next preferred idea, which is to do capital intensive but at an acceptable rate. But when it comes to contrasting gold and crypto and productive assets, I think one of the key takeaways was that if you're in a growing economy, if you have faith in the economy, if you have faith in the system, then you just kind of stay put. Like Mr. Agrawal also mentioned, he said from 1942 till now, in his own investing career, America has seen, I think he said 7 times a Republican president, 7 times Democrat president, right? And it didn't matter. So I think that speaks a lot about remaining invested and keeping the faith, actually.
No, investing in China. I mean, everybody's talking about it. Has he dropped a hint that he's going to buy in China once again, Sameer?
I think he wants to. That was very clear. Now, whether he can find a business or not, but maybe he could invest in an index of China if he likes China and he likes index investing better than keeping it in cash. But in general,
why do you think he's not gone into ETFs? Why do you think he's not gone into exchange traded funds?
Because that'll be embarrassing. Just like last year he praised Jeff Bezos so much, but then he said he couldn't buy. I said I'll buy. So I bought Amazon that day. The last year it's already doubled. But the thing with him is when you have put yourself, actually in a sense he's put himself in a corner. He knows he likes Bezos, he knows he likes that, but since it's considered as being a bit late or it's technology or something, then he sort of backs off. So we should be shameless in these things. You should not so much corner yourself with a description that you can't do something slightly different or quite a bit different.
Yeah.
No, but I think there could be another point, Samit. Typically you miss the stock at say $100. Why should I buy it at 800?
Yeah. So
how do you rationalize? You couldn't rationalize at 100. Now 800, how do you rationalize?
What Sameer is saying is if he sees the potential, then you can get in at any price. He's done that with Apple actually.
Yeah, correct. He's done quite late.
Yeah, and he's still building his conviction in Apple. Mr. Agrawal, I mean, don't you think that As he says, right, don't time the markets. If you have conviction in the business, go ahead, buy.
By the way, he clearly times the market. Because in 2008, September, October, he said the market was very bad, so he bought everything. He was timing it.
Yeah, that's true. He bought Bank of America Merrill Lynch at $10. That is, yeah. So what do you think about that? Do you think he should have bought into Amazon? He should buy into Amazon even now?
I don't understand Amazon, so I can't speak for him. But as Samir says, if he's convinced, then I mean, the best thing is to buy. And he did buy. I think Samir
I bought. No, I have it. But he didn't buy it.
Samir is a brave heart. No, but talking about investing in China, he spoke about how that market works for him. I mean, he's made a couple of investments there. He also, in between the lines said he's had quite a bit of success with investing in Israeli companies. I was hoping to hear that you'd say something about India.
But
at least in the profile of emerging markets.
Even by mistake, nobody uttered India. Generally, China,
what were we doing there? There were 80, 90 of us.
That's what Samir is saying. That why? I mean, there is not even a question from India.
Journalists were not allowed to ask. Otherwise, I did my bit last year.
Yeah. So. I think
No, but India, there's no chance because, India puts obstacles which are not needed. For example, he said that in UK or wherever, if I buy even 3%, I have to announce. In India, you have to announce at 1%. Yeah. And if
That's
you do it in
the
a
point
day,
I was
0.5%,
making.
you'll have to announce. Now, he can't keep doing it under the radar until he adds up to whatever
No,
percent.
in India, if Mr. Arora fix up a meeting,
They
it
announce
will get reported on the
They
exchange.
say that he
actually.
met the management. I mean, we are over, whatever.
Regulating the system.
Transparent.
If I were to ask you, Mr. Agarwal, to your mind, okay, we can go on discussing what he did highlight through the course of the Q&A. What was a big miss according to you? I mean, what is it that you were really hoping he would talk about and he didn't? Or you think he covered pretty much the entire gamut?
Yeah, I think almost all the relevant topics of today. I think what I saw the difference this time and other years. Like he would take on to the government, local government, say Trump word, I don't think both of them,
nobody.
They didn't utter. So I think they're a bit snubbed in the sense that they're a little scared why to get into this trade war. So the trade war question came up. Yeah, but they said,
Even
in
he
fact, that was a very interesting discussion where he said he didn't utter a Trump policy because it's a very Trump policy.
Yeah.
The trade war is created by his tweet or whatever. It is an agenda pursued by Mr. Trump single-handedly. But he didn't say that, but he said both the countries will prosper, and he went on to say that the benefits of trade is not visible, it is not so openly visible, but the difficulties of trade, when you do a trade, then the industry which suffers, that is very clearly visible, which is politically very difficult to handle. So the countries must learn how to handle. So he was for the trade silently, and he said both the countries are very diligent countries, and they will not go to a irrational trade war. He hoped that. Yeah. So, but apart from that, whether he used to take earlier, Manjar and these guys, they used to take a very pole position. I remember when antitrust thing came up for the Microsoft. I don't know what was the question, but they went on hammering the entire bureaucracy for taking up that action. The competitive advantage of America after a long time has come back in software and. And they are trying to break up Microsoft. Do they understand how companies work? And they were all over. But on this Trump thing, the readers, they were
Actually, I wanted to ask a question that if Jeff Bezos wants to sell Washington Post, would you buy? Because nobody wants to take on Trump and had tweets against themselves, so they were.
No, but Ashish was making this point earlier as well, right? That, he's discouraged trade wars, but he did drop a hint that, look, presidents and prime ministers need to be educators, right? So in that sense, he's like, you need to be creating an environment which is conducive for countries to grow together rather than,
I just
step on
picked the
each
thread
other.
from where Mr. Agrawal said actually that, the benefits are not visible. He actually said that, for example, if there was no bilateral trade or if there was no trade with China, then you don't know at what cost your phone would actually come. So that's very difficult to quantify. But on the other hand, when a couple of people lose their jobs, then that's very, very evident. So basically, there was some discussion about why leaders need to be great educators. And in fact, if 2 years back on this whole political thing, I distinctly remember 2 years back there was a question where somebody asked him that you are actually backing Hillary Clinton. So what will happen if Mr. Trump becomes the president? and what will be the implications for Berkshire Hathaway? That was the question. So he said that if Mr. Trump becomes the president, then you'll have a lot more to worry about other than Berkshire Hathaway, actually. So, and this time, if you see, it was all very diplomatic and very nice.
Gautam, contextualize this for our viewers because, you know, in the markets of late, geopolitics and, you know, these trade war concerns have been pretty much top of the mind. Do you think in a meaningful manner he would have addressed those concerns for investors?
I think he also mentioned another thing that, you know, we always believe that the current set of politicians are the worst, and we forget that in the past also there have been worse politicians.
Yeah, it's a cycle.
We have lived through Hitler, Mussolini and all that. So the whole point remains that as long as you are bullish on the long-term call of the global economy, and we all know that the quality of life has improved and improved only last 50, 100 years, even more. So if you're bullish on, let's say, the US or on India or any asset class that you're investing in, these things are temporary matters which are not that important. And if you look at global politics, it has become much more calmer compared to, let's say, 50 years back. So things are improving only. The long-term trajectory is an improving trajectory. That is something people tend to forget. People just focus on the near-term issues. That's why he headlined the first, remember the New York Times headline, that see how bad things were. The US was on the verge of losing a war to Japan. And that's where he started investing probably. And those stocks went on to become multi-baggers. So probably, you know, when there is a lot of fear around such things like trade wars, hopefully that gives an astute investor also an opportunity to invest and make money over the long term. So that has to be remembered. That's the context.
This is, of course, talking about the news at hand and, you know, the most relevant headlines at this juncture. What about his investment philosophy? Anything new that came out in the way he is looking at his investments right now, Sameer, to your mind?
I don't remember, but more important was the sort of reconfirmation of the old things. If you say new, I would only think that I think he's become a little flexible because, you know, because what he said about Apple, actually he said the same things about IBM 2 years ago or 3 years ago, that because IBM is buying back stock, therefore it's good for him and he hopes that it remains low forever. And now he must be saying that since God has answered all his prayers, he shouldn't ask for these things again and again. But that time I remember him saying that it's good that IBM is low because the company is buying back stock. So actually in some sense, in a public forum or in a big following that he has, to be able to change the whole thing situation completely, sell it off and not feel too bad about it, I think is a great thing. Because when you overly say we want everything for the long term, everything only to be bought, never to be sold, favorite holding period is forever, you have to remember things like this.
But that is music to your ears.
I like these things because I say that you cannot say like that. If it continues to do well, you should hold it. I own HDFC Bank for 21 years, but I am not long term because I look at it, it's doing well, so I hold it. I am not holding it, it's doing badly, but I still want to hold it because I want to buy things for the long term. You are buying them for the long term because they're doing things for the long term and going up as you're holding them. So I like these things that he's turned around, and neither he feels bad, neither should anybody else.
Yeah, no, absolutely. And, you know, a lot of criticism has been drawn towards the fact that, oh, maybe he's stepping back on his investment philosophy, or maybe he's liking technology, or is he stepping out of his circle of competence? The thing is, in an ever-evolving market environment, your philosophy also evolves.
Absolutely.
I mean, he has started selling off shares. So my question is, would you hold it against him that he doesn't want to sell Wells Fargo at this point in time, even as the company goes through transition? He may have his own thought process on how he would want to keep conviction with the business.
In fact, he did come very strongly on Wells Fargo. There was a
in the past.
discussion on that, and he defended. He said
Everybody
it
makes
has happened,
mistakes.
they are going to take corrective action. So he still has great faith in the franchise, and probably it is continuing. But I mean, it's all question of maybe next year the commentary can change.
On Wells Fargo, I think his view is that if he didn't have it, he would have considered this as a good time to buy. That the franchise is good, but the thing is bad. If he already owns it, now what to do? But I think there he was quite logical. His basic point was that I guessed that if he didn't have it, this would be the time to buy it.
But if he now?
No. What I mean is, if he already has it, therefore he has to continue to hold it. That's because if it has fallen, but nothing else has happened. So I think that was. Okay.
Anything that stood out for you, Gautam, in the large, landscape of the investment philosophy that he highlighted?
I think that's what, even, to understand that even holding a stock is basically buying. So even if things are bad and you have an existing position, holding on to it is also buying. You're taking that call that you're not selling out. So that's one thing. Other than that, I think he has been a much more open-minded about tech investing in the last 2 years. And as Ashish also pointed out that, Munger clearly explicitly told us that, just don't follow us blindly. Maybe we're not buying Amazon or a Google simply because we don't understand it, right? And he made it so clear that, he went to Google campus and thought that it looks like a kindergarten. It actually does. We went there last year. So we remember. So if you don't understand, you don't buy. That doesn't mean that because he is not understanding that we shouldn't buy, right? So
no, and the way he's looking at Apple is very different. Everybody keeps telling him, oh, Apple is a tech company, he's invested in a tech company. But he's like, look, I'm not looking at it as a tech company. And that's where the differentiation lies. Ashish?
I think that he said last year on Apple that he's looking at it as a consumer insights company. But today I think a lot of direct and indirect references actually left the impression that he thinks they're going to buy back. And it will be that might actually make money. But on investing philosophy, I think there was another interesting thing which came out, which maybe we might be knowing about it, but may not be evident to everybody, where he contrasted what he learned with Benjamin Graham and what they're investing now. That was interesting. So I think Mr. Agrawal can probably throw a bit more light on that. Maybe he's closer to the topic. But I think he said that, Benjamin Graham managed $12 million, whereas these guys have had a much longer career. They've had to do a lot more to scale, and that's why their philosophy has to evolve over a period of time.
Graham is not scalable.
Yeah, Graham is not, he made it very clearly that it is not scalable in this $130, $140 billion kind of investing. It just doesn't work. I mean, you cannot get $300, $400 billion worth of assets at some crazy price. I mean, if you're managing $10, $20 billion, even today you can probably find, but not with this kind of. That Buffett himself kind of almost accepted this fact.
Yeah, but he's pressed for ideas. I mean, valuations are not supporting a favorable purchase at this point.
But he's still pretty
$116 billion,
Yes,
the money is only going to compound every year.
He didn't give a lot of hope for returning the money or buying back. And of course, he said of the two, he will do most probably buy back. But he didn't seem that he's in the mood to do that even now. He's still hopeful. I think he deployed $15 billion in the first quarter till April. That's what he said, I think.
That's because of Apple.
Yeah, Apple. So maybe he might be buying. I think he's already bought 15% of his total net worth into Apple.
5% of the company.
No, 5% of the company.
Yeah,
but
correct.
His own is 300 billion.
No, 500.
What about
No,
7.5 crore shares?
1.3 times, right?
Not 1.44.
1.44 times.
Yeah,
okay.
so it's about 290 or something. 300 billion is the net worth. Of that,
Yeah,
42
about 40
billion is
billion.
only Apple is still buying. So I think he's really taking a big one.
Yeah, so do you think that could be another way in which he redeploys his capital in existing companies, increases his holdings because he just doesn't get the opportunity of buying something new? I mean, what's the solution? Because everybody keeps asking him every single year. I mean, for the last 3 years, I've been hearing about his cash pile just increasing with every passing 12 months. I mean, what is the solution to it? What does he do to kind of evade that
Send
for
it
a
to
while?
us. We don't know about a solution. We wish we had these problems.
I asked him, will you invest with active fund managers? And he's like, no.
Yeah, obviously not. Yeah,
So I think patience of patient guys are being tested. So here he's holding on to 130, 140, 150, and maybe they're hoping that market crashes and they'll put in all the money, like what happened in 2008. Then when he bought the railroad company and he put his $30 billion. So he's hoping that someday market will crash. And maybe
on these people who wish for markets to crash, there was this line, I wish God didn't give me what I hoped for. It's not as good as I thought. So the point is, I don't think he's
But
wishing.
you're a long shot
I don't
guy.
think he's wishing for the market to fall or not. But he has spent his extra money. That means every year he makes 20 billion extra. He's already spent extra 20 or invested extra 20 in Apple. So he still has his old 100, 115. That either you can buy one big company or maybe that you can also break up into 5, 6 smaller investments of 15, 20 billion type. So that is okay for the moment. It's not such a big thing because he's already at least not increasing the pile.
But you're a long shot guy, so you make money both ways. My question is for a long only investor and for a lot of people who are servicing their clients or advising their clients out there, they get a bit perplexed because if Mr. Buffett is having a hard time generating returns, then what do they do?
By the way, on that, may I just say one thing because I presented in my presentations. From 1998, December 31 to today, Indian market, that is Nifty in dollar terms, has beaten Warren Buffett. This is for 20 years. So, I used to feel bad when I would see a guy suddenly saying, I hold your stock since 96. And I would say, shit, he's made a lot of money. Then I realized my index has beaten him. So the point is, don't get literal. Because he has a problem with 120 billion investment. Doesn't mean in India we can't invest 1 billion. The point is that his principles are right, but in our market they are still relevant and valid, and we can't wait for him to spend 100 billion before we become confident about India, by the way. So that is the real numbers. There's no this thing. Indian market dollar terms has beaten Warren Buffett for 20 years, and we are not talking about him who has beaten the index. We're talking about the index itself.
Yes, we could have a clap, yeah. Go ahead. 3 cheers for India. But thanks very much, gentlemen, for this great, insightful discussion. Thanks very much. You guys have been a lovely audience.